does AI ever have a consciousness? And with that consciousness decides it needs to preserve itself. And in order to preserve itself, it needs to destroy humans or domesticate them. I don't believe AI is going to have consciousness. So with that, it'll stay at the will of its human masters.
Hello, dear friends. Today we have another series episode of our podcast, Ventures from the Valley, brought to you by R136 Ventures. I'm Viktor Avlovsky, and I want to host and welcome today in the studio Jim Pulcrano, who is my friend. He is IMD Professor, and we rarely speak with people from Europe, so this is a great opportunity for us to speak to one of representatives of the top academia in Europe, top business school for sure, and to speak about European ventures, which Jim is interested in, and he is a frequent visitor to the Valley. So we will speak about his experience being like European professor and teaching like classes in Europe and coming frequently to the Valley. So Jim, welcome.
Thank you very much, Victor. Very nice to be here with you.
Excellent. So maybe you can just start with like giving a little bit of your background. So what you teach, who are your students, why venture is something important for you?
Yeah, so I mean, this is not something new. This goes back 26 years now. So, yeah, I'm not a pure academic. I'm an engineer by training who one day discovered that I liked working with startups. I've co-founded 3 startups, been the first adult in the room and 3 others. And along the way, I was asked, hey, we want to have entrepreneurship as part of our executive MBA program. Could you take responsibility for that? And it wasn't because we were trying to create entrepreneurs in the sense of students going out and doing their own startups. It was more of our belief that everybody should understand the mindset of an entrepreneur, whether that's to do their own startup, to invest in a startup, or to recognize the crazy people in their company who are creating innovations and not destroy them because you don't recognize the entrepreneurial mindset. And that, we started that, again, it's 26 years now. It's hard to believe. But that was partly, it was triggered by what was going on in Silicon Valley. Back in the late 90s, we said, if you're going to teach anybody or help anybody to understand entrepreneurship, they have to see what's going on in the Valley. I mean, it happens everywhere in the world, but in the Valley, it's so iconic. I mean, you walk down University Avenue, every third person you see is probably either an investor or an entrepreneur. And that you can't get anywhere else. So that was our reason for doing this. It's evolved a lot over these almost 3 decades, but that was the starting point for it.
Okay, so maybe that's a good start with just a deep dive into the differences, right? So you are kind of a bridge between the Valley, Silicon Valley, and European entrepreneurs. If you just look into the starting position back late 90s, right, where the state of VC, the state of venture investment and startup community was back in late 90s in the US, and where it was in Europe, and now like 30 years after, almost 30 years, 25 years after, what eventually has gone different. So if you like, I mean, in financial world, it's like common. You have like a starting point where it's all 1 or 100%, and then you see how it evolves. So if you put it like 100% and 100% or 1 or 1, and then you would get like where the VC state of VC. Talking about differences. Yes. So
well, I can go back further than the 1990s. My first venture was in the late 80s here in Switzerland. And the idea of venture capital didn't even really exist. You had high net worth individuals who are usually served by the private banks, and they might come to you and say, hey, I'd like to invest in young companies. but the whole kind of ecosystem of venture capital did not exist. I mean, there are one or two firms that were merged during the 80s that are still alive today, but the idea just did not exist. Okay, Silicon Valley, by the late 90s, it was a real thing. We take the first Netscape going public, that's kind of the thing that triggered what we saw. But even then, I'd say it wasn't until the early 2000s, just as the dot-com boom was subsiding, that here in Europe, and I can really not speak for Europe, I can speak for Switzerland more than anything, that suddenly doing a startup became a rational career choice.
Even in Switzerland, right?
Yes, because before that, if you went and did a startup, there was something wrong with you. I can remember even my classmates, my MBA classmates saying to me, Jim, is there something wrong? Why are you doing a startup? Not realizing that it was what I wanted to do. But I'd say it was like 2001, 2002, where suddenly even the universities wanted students to understand this is a valid career path. You want to do a startup, it's okay. It's a good thing. But that was literally the early 2000s. Now it's become very common. Hey, you say you're an entrepreneur, you're doing a startup.
So how common is it? So if I come to Zurich, say, or Geneva, or Lugano, will it be like at the Main Street Bank of Trust that I go
no.
every 2 out of 3 people who walk down the Bank of Trust are either venture investors or entrepreneurs?
No, it's still
not the case. So how would you compare it? I mean, is it like 1 of 100, 1 of 1,000, 1 of 10,000?
You're going to find pockets. So if you were over at the EPFL, the Federal Institute of Technology, the university 15 minutes from my office, you'd find entrepreneurs everywhere. Same thing with the ETH up in Zurich. But if you went to the main shopping street of Zurich or Geneva, nada. They're just not there. And it's interesting because I just recently interviewed an American VC who had moved here. And she said it just felt so strange because, I don't have people around me who are part of the ecosystem. Whereas when I was in the US, I always had people who were part of it. And I think that's a crucial difference between almost everywhere in Europe and Silicon Valley, is that here you still have to explain, I'm an entrepreneur, I work for a small company. I didn't take a big job with Nestle because I wanted to do this. Whereas in Palo Alto, this is the norm. And I think that's still a very valid difference between Silicon Valley and here.
So that's I just want to you are a professor and you are making research on that. So I'm very much interested in this particular question, right? There were probably maybe a dozen of VCs back 25 years ago in Silicon Valley. Well, maybe 20, maybe 30, right? Maybe like 100, 200, 300 angels, right? But definitely less than 1,000. In 25 years, it grew to probably 50,000, maybe more angels. And I think 25, 30,000 investment professionals. Venture firms, right? Located here in the valley. So it means that it grew exponentially, right? And it grew exponentially in number of dollars being invested, dry powder. It grew far beyond twofold, probably like 100x or more. So compared to Europe, where it didn't grow that much, right? So it's still in a kind of infancy, right? Compared to Silicon Valley. So my question is why Europe is not progressing as fast as the US, and in particular California, right? What are the triggers and what are the constraints? So why even Switzerland, which considered to be a tax haven, right? It's a very right place to start your businesses compared maybe to other continental European countries. It is not taking off yet. So what's the reason for that?
Well, I think taking off is a stereotype that isn't really helpful. I mean, part of it culturally is just we're comfortable in Europe. Why would you take the risk of doing something where you could fail? Now, again, it's gotten better. When I did my first startup in the late 80s, like I said, people thought I was crazy. I remember, having friends say to me, Jim, if this fails, you will never get another job in Switzerland. I didn't care. Today, that's no longer the case. But it's taken us quite a while to get to where we are today. But there's still a lot of comfort here. Hey, you graduate from the EPFL with your master's degree, you can get a job anywhere. And you know it, and it'll be a relatively safe job. So why would you risk all of that by creating a startup? So that is still part of the problem here. The other is the think big mentality. And this is something that is interesting because I get to see it from both sides. I bring Swiss startups to Silicon Valley with me, with my executive MBA class. And these are all good startups. I mean, solid ARR, et cetera. They know what they're doing. They get to the Valley and they hear the big stories. And people say to them, why aren't you thinking bigger than this? And they say, well, I've got to keep my feet on the ground. We're growing incrementally. And that still is a huge difference. So this idea that I'm going to grow my business slowly, step by step by step. I'll raise 5 million. And when you say, why wouldn't you raise 50 million? I don't need 50 million. And that is still a colossal difference between Switzerland and most of Europe and Silicon Valley. It's still like that.
So it's level of ambitious. You're right. I'm absolutely with you. And I do agree with this notion of failure, right? So in the Valley, it is much more common to accept and appreciate failures than in any other part of the world. So even you failed with one or two of your startups, you are still appreciated for what you were doing.
You're a better investment. If you've had at least one or two failures, you've learned.
You already learned something.
And you learned it on somebody else's money, which is even better.
Right. So I would rather give money to someone who is starting his second or third venture, even first or second, even both of them were not a success, rather than just giving money to someone who is the first timer. That's exactly the case. But I think that second, there are a few other considerations here. I believe that also European entrepreneurs are less risk takers than the US entrepreneurs. Not only because of the risk of failure, just also because they don't want to share success with VCs. So many times I heard from relatively successful companies in Europe, which are tech companies, especially in Germany, when entrepreneurs took no venture money at all, although they were given money, but they refused to take. And they grew to a certain extent, but not beyond that. And I was always asking them, and some of them are good friends of mine, why are you not growing? They said, well, because, we do not have enough cash to grow, right? You just need to boost cash. And then my question is, why won't you take venture money? I said, well, we are not going to be owners anymore, right? Now we are 100% owners of what we what we built, and we will share it. Why should we share it? Just to grow, right? Nobody really in Europe, or not that many people in Europe, want to grow their business in expense of losing the control, losing 100% ownership, right? So it's a kind of a different psychology, I think. And I really learned how people who were doing that in Germany, for example, or in Switzerland, after selling these businesses and moving to the Valley for whatever reason, starting new business here, change their mentality, because they see here, it's not so bad actually to share maybe even 70%, to give 70% of your shares away, but to grow real big. So I think that there is no ambitious there, but also there is no this, attitude of losing control for the sake of growth.
There's
So it's just different mentality, no?
Yeah, but I think there's a couple of asterisks that you have to put into all of those statements. Number one, the question of risk takers. I actually believe that entrepreneurs here take more risk than entrepreneurs in Silicon Valley. Now, I know that sounds counterintuitive, but I know it's true. And I can back this up 100% because in Silicon Valley, everybody understands how to work with risk. Everybody knows how to work with you as an entrepreneur. It's in the DNA of everybody. Over here, nobody understands what the hell you're doing. And so it's difficult for the ecosystem to support you. So in that sense, even starting a company, you're taking more risk. The other point I put in there, and I've seen the same thing as you about the...
Maybe also more risk because you would take all these expenses, all these investments on yourself, right? You're not...
Well,
at the end of the day, you're losing somebody else's money, right? Not your money if you just take money from someone.
Yeah. If everything is a venture capitalist money, then, hey, you're okay. But back to your point about whether Swiss or Europeans are willing to take venture capital money. The vast majority, yes. But you also have to put that back into the ecosystem. The VCs here, many of them, let me say many, not most, they're not as good as the ones in the Valley. They just don't have the track record. They haven't had 2 or 3 decades of building up a venture capital ecosystem. And we're trying hard to help with that. But if you think about it, if you're an entrepreneur and you're dealing with a venture capitalist who's only been at it for 3 or 4 years, how much confidence do you have that he or she is going to do a good job with you? I mean, if you think about it, venture capital has only been something that's existed in Europe since, as I said, the early 2000s. We haven't been through enough cycles. And you know this, venture capital is an apprenticeship business. You learn by doing. You have to go through some cycles, you have a bunch of failures, and that's where you learn. And that takes time. And in Europe, there aren't that many who have been through it. So then you put yourself in the entrepreneur's shoes saying, I'm going to deal with this guy and I'm going to be extreme here. He's an amateur at what he's doing and I'm going to take him on my board. That doesn't sound. And I'm not saying that all VCs here are amateurs. Certainly not. There's some very, very good ones that I've worked with. But if you want to, generalize things, you say in the Valley, there's a lot of professionalism, a lot of people who have been at this for a long time. And here in Europe, not. And the other thing I'd add to it, which I think is a major difference, and I wish I had the time to do the research, you look at the VCs in the Bay Area, many of them are operators. They did a startup or they spent 30 years in an industry and then they joined a firm or created a firm. Over here, I believe we have too many who were bankers. They were in the financial system. They said, hey, I know how to manage money. I'll start a venture capital firm. And they don't have that operator's experience. And for me, that's crucial in a VC firm.
I do agree. And although there are not that many VCs here in the Valley now, probably like 30 years, 25 years ago, it was different, but now it's like more investment bankers and lawyers than anything. So I feel like I'm almost the only guy here, like sometimes in the boardroom, who is literate in technology, who can like ask qualified, right questions and go deep. Maybe it's not as deep as engineers would go, but still much deeper than others. But I do agree that there are at least a few former founders there who might just share different backgrounds, but still like had a lot of experience in managing that. I mean, that sort of venture, right? I believe that there is also one more thing to add here is that venture business is all about disagreement, right? As my colleague Ilya Stribulaev put it in his book, he says that it's like a major difference. You have to agree to disagree. And disagreement is a right thing in venture because if everyone is in agreement and you really understand everything around the business and technology, then it's not good investment, right? Because you are at the frontier, and frontier is all about uncertainty and unknowns, right? So, and you have to really have a proper mix of agreement and disagreement also on the board level, not only when you make a decision to invest, but also when you make decisions on the board, on pivoting, on doing certain experiments, research the market, finding like a proper fit. And that what is different in European culture overall, right? European culture is much more consensus driven, right? If there is one, even like forget about like vetoes and all this legal rights. If one of five is in full disagreement with other four, then European mentality would not allow to make a decision to be made, right? People will try to find the consensus, and consensus in venture, in startup, building startups is not the right thing to have, probably. Like,
Well, I agree 100%.
It's a bad habit.
I'll be teaching a class on innovation a week from now with MIT. And one of the things I'll be saying to them is if you're not having arguments, then you're not doing your job. Because what it means is you've not gone deep enough into the issues to understand where there are differences. So, we look at it and say, we all agree is that it might be a good investment, but it's going to be an incremental one. The ones that do really well are going to be the ones where you have real fights in the boardroom or in the investment committee. And that's where the issues come to the surface. When people are actually getting emotional about it, that's when you find out what's really important. And then hopefully you make a good decision. But you need to have that kind of discussion. And you're right, especially here in Switzerland, compromise, consensus is considered an important cultural value. Yeah.
True. Okay, so let's move on. So my next question is related to your academic work and how academia in general is helping venture ecosystem in Europe versus the US. Obviously, we have here like Berkeley, Caltech, and Stanford, who are which are the alma maters of many of the founders, right? Also, most of these founders are foreign nation, came here from elsewhere, other parts of the United States, but mostly from India, China, Israel, Russia, name it, right? Academia is building up this, if you will, like a base for this future innovation to happen, right? And commercialization of this innovation. Is there anything different in Europe compared to what we see here in the Valley?
Well, first of all, I think there are, I can only speak to the two Federal Institute of Technologies here in Switzerland. From a technology and a research point of view, they're at the same level as the big universities in the United States. They create amazing breakthroughs. But from the point of view of, and do you want to create a startup with that? We're still not there. It is encouraged. The tech transfer offices are trying to be more flexible. There's a ton of money from the government to encourage people to go out and try, but it's still not the norm. So they are trying. But I was just having this discussion this morning with one of our students who had been over to the EPFL and said, the technology I saw last Thursday night when they were pitching was amazing. But when somebody would raise the question about, well, who is your customer? Silence. Because, this idea of I'm going to take a technology and turn it into a useful product for a customer, and this customer base is growing, willing to pay. That's not yet part of the mentality. That's being taught, and I think it's getting better and better, but it's still not the norm. Whereas at Stanford, this would be part of anybody's discussion around a new technology. What's the value proposition for which customer segment? Whereas here, that's a second discussion after you've told everybody how wonderful your technology is.
Well, you have been to a startup community. You started your own companies. How many of your, maybe in percentage, or people of your colleagues have this background who have ever been to like startup business? How common is it for professors, for academic researchers to go back and forth from startups to?
It's not very common. Very often, yes, especially again at the technology institutes, A professor will be an advisor to a startup that gets spun out of his or her lab, but as an advisor. The idea of doing, like I've done several times, of actually stepping out and doing the startup as a co-founder or even as CEO, that's very unusual. Because again, you got to think about it. If you're a tenured professor at one of the top universities in Europe, that is a golden job. I mean, you can never be fired. So why would you do that?
But it is the same in the US, right? I mean, if you're 10 years professor, you could not be fired either, right? But
Yeah,
university is encouraging professors actually here to start their businesses, and they will welcome people back after
exactly.
they either agree, succeed or failure, whatever.
That's the difference. You'll get welcome back. Whereas here, there's going to be a question about what happened. You dropped off the track, and now you're going to come back, crawling back to us and ask for a job. That would be really unusual. I'm not saying it's impossible. It's just unusual. Whereas at Stanford or UCSF, that would be considered just, normal. Hey, great. You went out and tried something. Welcome back. What did you learn?
So there is no incentive, right, from university for employees to kick off or anything like that.
The interesting thing is,
did you speak to your administration? I mean, did you raise this question that we have to encourage this to happen?
It's not encouraged. I mean, you think about it. For big universities here, what's most important is the number of citations from the research papers that are published. That is by far best. Now, maybe amongst your colleagues, you want to have bragging rights and, hey, I had 3 startups spun out of my lab. But that's different. That comes second to, we had this many articles published in this many A journals. That is still the norm here.
Okay. And maybe just a personal question to yourself. Are you investing in startups of your students if they start something? Not only time, but also money. Is it common?
Yes. As an angel investor, it's. I would say it's not everybody, but it's common. It's not a strange thing.
Right? I mean, professors do it. So they put money, right? It was some money. Mm-hmm.
And they lose money too.
Sure. I mean, most of this money is to lose and some only to make something. Yeah, absolutely. Okay. So talking about students, I spoke also with a bunch of professors here at Stanford, and especially MBA students. They say that there is a clear pattern that if 25, 20, even 15 years ago, most of students, MBA students, goals were to move in their careers up, so they could only get VP level of say Procter & Gamble or IBM or something if they go to a top business school, and then they can be qualified. So that was a career lift for them. Now, most of the students are from the same background. I mean, they come from big companies, but not for a career lift, but for a career shift. So basically, they want to become entrepreneurs. And I saw a few surveys on that side that it's up to now 90% of people, they want to change their career to become entrepreneurs instead of being corporate employees. Do you see similar pattern in Europe or anything like that happening, that entrepreneurship is becoming for MBA students more common?
Yeah. I mean, first of all, I think there's 2 steps to that. First of all, anybody coming to an MBA like the IMD MBA, which is a boot camp for a year, I mean, it's hell. They do that because they want to make a change. They do not come here because they want to do the same thing. And it's either going to be a change of geography, a change of industry, a change of function, or in a good economy, all 3 at once. That is a given. You don't come to this program and pay $100,000 and spend a year in hell to do the same thing. What we've seen over the last couple of years is more and more of that change is towards, I want to join a startup, or I want to join a VC firm, or I want to do my own startup. So as an example, we have an award once per year, $100,000 to one student who has an idea that they want to turn into a startup. But in order, as one of the prerequisites, they have to say, I will not take a job after the MBA. I will do my startup. So this is a big ask. Last year, 20% of the class applied to this. And, you look at that and say, okay, that's maybe not all of them would have gone all the way, but the winner and the second place one both did it. And they're running their startups now and doing very, very well. So, it's there. And I think it's more, partly it's the economy. It's not as good as it was, say, 10 years ago, getting a job at P&G. But part of it also is back to what I said earlier about it's a normal career path now to do a startup. Nobody looks at you strangely when you say, no, I'm going to go out and found a company, or I'm going to join a venture capital firm. That's become normal.
Well, it's a good sign, I believe. I think that overall venture capital is fuel for innovation and modernization of economy overall, and it's a fuel for productivity boost. If you look into the U.S. economy, I think every second startup in the last 25 years that went public got VC money, so was backed by venture capital. And if you look into the most high-value companies like Fortune 500, then 7 out of 10 largest U.S. companies are venture-backed and didn't exist 50 years ago. So if you compare it to European top 10, it will be like more or less, apart from maybe one or two, more or less like a traditional set of companies which were there 50 years ago, and some of them were even 100 years ago. And that what was made by venture capital, right? So if credit and capital was the biggest invention of new era, like capitalism era, right? Overall, then venture investment was the best invention of this innovation era, if you will, like new edge. So I think that that's the only way to go. So, I mean, unless there is something else invented, right? And there were some attempts, like ICOs, this crypto is kind of a new invention that may even like disrupt venture capital. It hasn't happened yet, but could well be. By the way, do you see any potential in like crypto and blockchain overall? Do you see like any? Because Switzerland is ahead of probably other states in terms of adopting. I mean, it's beyond maybe Bahamas and Cayman, but among like stable jurisdictions, it's far the most like cutting edge frontier of regulation in crypto. Do you see any evolution, anything what is picking up there?
Yeah, Switzerland has been, especially the city and the canton of Zug, has been very friendly to crypto. Doing everything they can to make it easy within legislation, not doing their best to not have scams. So I'd say Switzerland has been very friendly to crypto. We've had a couple of successes, but, I don't see it as being a big part of the economy yet. You would expect with the banks here that maybe they want to help and promote it, but not. So do I see a future in crypto? I'm not entirely positive. Blockchain, yes, very much so. I think it's going to underpin much of what we do, but crypto itself, I'm not convinced that it's going to change, at least in my lifetime.
Well, it might well be the case. So there are either people who really like believe crypto will change everything, or people who think that it's just a fake and it's gonna go with like hype and speculation, as many things gone so far. Maybe you can share some of this. You said that there are some of your students who really have chosen a career of venture-backed companies, started up companies. Maybe you can share some of the success so far, some companies that come to your mind, which might be kind of maybe unicorns, maybe some like whatever like other success you may measure like another way
Yeah,
than just
I mean, one of them,
unicorn title.
yeah, one of them that I'm thinking of right now is a very unsexy company, but they basically have figured out a way to replace many of the chemicals that are used in water treatment. And you think about that is really boring. But then if you think about it, every person on earth wants clean drinking water. And if they can reduce the amount of chemicals that are used in this and reduce the amount of chemicals that need to be transported to this is a huge business. And we chose them as the winners of our award a year and a half ago. And it's not surprising that they're doing really, really well. Every time they approach a municipality or a large company that needs water treatment, open arms. So things that aren't necessarily what we'd expect, like from a Silicon Valley high-tech startup, these guys are technology, but in an industrial level. So yeah, I mean, there's plenty of different examples out there.
I think that actually talking about like Swiss, specifically Switzerland, Swiss startups, but also general European, I think that that's a niche where Silicon Valley is not as advanced. Actually, Silicon Valley has passed on blockchain revolution, if you will, and crypto. They caught up a little bit on that, but they really were not pioneers of this. So they missed this cycle. So they were latecomers to this, mostly with venture-backed, like venture money, but not like really a lot of venture-backed companies here in blockchain. Same I just see in the industrial and clean tech. For some reason, it's not the place where these startups are happening. Probably that's lack of experience overall. But mostly what people do here well is software, and everything else is not a priority. And or maybe cheap manufacturing when design.
I think this may be the opposite side of the success of Silicon Valley. Software, apps, etc. These are things that you can do quickly, and a venture capital fund can see a return in 4 or 5 years. You're trying to do industrial products of some sort. We're talking about long life cycles. And how many VCs have the patience? Let's say they invest in year 5 of their fund. They have to get something out within the next 4 or 5 years. And if you're building industrial scale things, it could still be another 5 to 10 years before anything happens. So I think that is one of the downsides of Silicon Valley. It works for tech where things can go relatively fast. It's not going to work for something where you need to invest for many years and have patience.
Yeah, maybe like 15 plus years. Yeah, like clean energy is a clear example of that, or maybe fusion energy.
Well, and I think there's another side to this that I was unaware of until not long ago, is that there is the Silicon Valley model, but there are other models across the United States of venture capital, which are just different. They're sort of halfway between the European view and the Silicon Valley view of saying, we can have patience. We can live in different places. We don't have to be on the coast. And we've got other specialties. One that was pointed out to me was in Alabama. And I remember when this person said to me, venture capital in Alabama, I said, what? He said, but think about it. We've got NASA there. You've got physicists, engineers, mathematicians. Eventually, they also want to do startups, but not in the way that's done in Silicon Valley. So there are different mentalities, even on venture capital and high tech across the U.S. that are different from what we see in the Bay Area.
Indeed. Yeah, totally true. Well, we discussed a lot this coming to the West, seeing things in the Valley. What about the East? I know that IMD has a campus and a large presence in both Singapore and Shanghai, right, in China.
Shenzhen.
Shenzhen. And do you see like innovation is shifting towards East? Do you see kind of things happening more and more in China? It's obviously much more state driven, right? But China has shown the best use of this state driven innovation and quite a significant performance and achievements in so many different areas that which they think are the right one to develop, such as defense, clean energy, many other areas. So what's your view on this side of the story?
There's absolutely no doubt that when China gets it right, it does it amazingly well. The problem is it could change overnight and become exactly the opposite. If you go back, what do we know? We're 2025. If you went back to 2023 and looked at, you were a startup and you needed to raise money, you needed apartments for your engineers, you needed lab space, you could get it just like that. It was just amazing. Fast forward into 2024, all of a sudden, if there was 100 billion invested in startups in 2023, we're down to 6 to 10 billion in 2024. Why? Because the government decided entrepreneurship is getting out of control here. So let's clamp down. So nobody's going to do it. Now we see that they're saying, okay, let's open up again. But think about it from the point of view of somebody who wants to take risk. Do you want to wait for the government to decide your future? So I think there's pluses and minuses to the way China does it. If you're in the right industry at the right time, there are no boundaries on what you can do. But if the government changes its mind tomorrow, you're done. And that, I think, is a serious deficiency in the way China does things.
From what I hear, you are much more committed to the U.S. way of innovating rather than just Chinese way, right? So you are more thinking of free market and entrepreneurs.
Well, I think it has a better chance of coming up with innovations that the market wants. Again, a couple of months ago, I was asked I had a group of Chinese bankers here at IMD, and they asked me, what do you think has a bigger impact on venture capital investing in China? Is it interest rates or is it politics? And of course, I had to be politically correct, and I explained that I'm not an expert. But at the end of it, I said, no, it is 100% politics. And of course, they all nodded. And that's just something to take into account. Politics affect every country, here in Switzerland and the United States as well. But when it comes to investments, we're relatively politics free in the Bay Area. And I think that's a good thing. Well, yeah, nowadays there's a little bit of a change going on. Hopefully it'll go away. Hopefully,
it's a really one of those interesting examples that I heard recently in the news, and obviously you read it too. That that the U.S. is gonna build this shield, shield against missiles, and that there is a tender going on with defense ministry and NASA and whatever. So that there is a consortium of companies, including SpaceX, Palantir, and Anduril, which are three companies which are unique in what they're doing, right? So they are as consortium are going to present their concept of building up this shield. But the thing is that they're going to build it privately, so it's going to be a private shield over the US, it will be a subscription model, basically. So the US government will subscribe, so we'll pay a subscription